Hi everyone, and welcome back to Stephan Livera podcast, brought to you by Bolt, the best place to buy, save, and store your Bitcoin using a 2 of 3 multi-signature vault where you control the keys over at getbolt.io. That's for the American listeners. Now, rejoining me today is Lawrence Lepard. He is managing partner at Equity Management Associates and always has a lot of interesting things to say on macro, Austrian economics, and what's happening around the world. So first of all, welcome back to the show.
Thanks, Stephan. Really nice to be back with you. I always enjoy our conversations. I should also mention I'm an advisor to the Bitcoin Opportunity Fund, which is a Bitcoin fund that's doing pretty well, and they're going to be raising another fund soon. So I'll just mention that.
Great. Yeah. So look, let's start. I think there's a lot of big topics. Obviously, there's threat of war going on. There's the hurricane implication.
Yeah, there's no shortage of trouble.
Government debt.
Sadly, right?
Yeah, it's unfortunate.
Or you want to go first?
Yeah, well, let's start on the debt question. I think this is something you and I have spoken about before. Last I checked, it was, it's the 2nd of October now. It's 35.4 trillion is the national debt last I checked. And it just doesn't seem to have any sign of slowing down.
Well, that's right. Arguably, it's even accelerating. The thing I think that recently put a fire under a couple of the hard money assets, gold and silver, was about 3 weeks ago, the U.S. government came out and announced the monthly deficit was $380 billion when the anticipated was 290. So it was $90 billion larger than what they thought. I mean, now you can't take the 380 and multiply it times 12 because it's lumpy. But if you did, that's $4.8 trillion deficit. I mean, we're clearly running a $2 trillion deficit, but I would say arguably it's even a bit larger than that. And there's always been a little bit of a disconnect between what they report as the deficit and the amount that the debt grows. They managed to sneak some stuff around and not run it through the P&L, the income statement, because the debt, if we run a $2 trillion deficit, the debt might grow $2.6 trillion. And I don't know where the other 0.6 came from, but the government's pretty good at kind of fiddling with the numbers. But yes, the point is that at a broad level, there is no discussion or thought in Washington, D.C. about how to address this problem. I thought it was extremely telling that, in the Kamala Trump debate, there was zero conversation about, the deficits and the debt and how it was going to be dealt with, and very similar last night in the Walz-Vance debate. So although there was a little talk about inflation, there was no talk about the U.S. fiscal situation, which is really kind of mirroring the situation that we've seen before in developing countries. I mean, this is not, there's no mystery as to how this plays out and what happens. I mean, we've seen this pattern over hundreds of years in a lot of countries. We've just never seen it in the largest country with the world's reserve currency. And, Venezuela did this, and Zimbabwe did this, and, Brazil did this, and Argentina did it, and, a couple times, and, Poland has done it. There are a number of countries that have had, very serious, fiscal problems, and then they've led to trying to solve those problems by printing money. But they were smaller countries. They weren't the world's reserve currency. And of course, now we've got the world's reserve currency, following that same playbook. And as you and I both know and agree, it's not going to end well. There are a lot of possible endings, but, inflation is almost baked into any one of them, absent letting just an enormous structure of debt collapse and having a situation that, looks similar to 1929, where there's all kinds of default everywhere. So, and I think that at the end of the day, the central bankers won't allow that. They have a printing press and they intend to use it, and they will use it. They've shown us that multiple times. And I think they view inflation as a lesser of two evils, with the other evil being, deflationary collapse. So,
yeah. And I'm curious your view on this idea. One thing that comes to my mind is it seems to be one of those untouchable areas nowadays. Now, I'm Australian, but it's, as an example, I heard that basically neither side mentioned all the COVID tyranny. And maybe the reason for that is both major parties were complicit. And maybe in the same sense with government debt, it's that both sides are complicit on this, other than a few libertarians, the Thomas Masseys and Rand Pauls and Ron Pauls of the world. And maybe if you went back like 10 years or something, there was Paul Ryan or someone like that, although not a libertarian, but that was probably the last you seriously heard of actually trying to cut the size of the state,
I think that's
isn't
right.
it?
I mean, there were maybe a few other names of the Republican Party who were trying to cut back on the spending, but it's a very, very short list. And And yes, I mean, it appears to be that the choice, the Washington, D.C. choice has been, let's pretend this problem doesn't exist. That's just, that's how they've decided to deal with it. And, that's fine. And, on a day-to-day basis, the country keeps running, right? I mean, GDP just grew reasonably well, and, inflation has come down, not as much as they say, but it has come down. And unemployment, while it's creeping up, it hasn't exploded upward. I mean, the economy is kind of bumping along. The U.S. stock market's close to record highs. So, to an outside observer, you would say, well, there's nothing terribly broken right now, except for the fact we're running these huge deficits. And, so I think that DC won't react until they're quote unquote forced to react, and it's very similar. I remember 2006, 7, and 8. I mean, you had to be blind not to kind of realize there was a housing bubble taking place. And yet, Bernanke and others were saying, no, we've never had there's no problem here. Houses have never turned down on a nationwide basis, et cetera, which was wrong. It was a lie, because in 1929, from 1929 to 1931, houses fell 67% in value. So when you have a real significant economic downturn, a deflationary impulse, housing can go down a lot, but they didn't admit that at the time. And I think that's the same thing here. And so my view is, at some point, we will be back, quote unquote, in crisis conditions. And, then that will justify the next big print that will take the government, balance sheet from, the 7 trillion that they managed to reduce it to down from, say, 9. The next one will take us up to 20 or more. And that's because if they stop printing the money, I mean, all the debt has to be serviced, and the GDP growth isn't growing. They need GDP growth to be faster than the interest cost, than the underlying. So they need negative real interest rates, is what I'm describing. And if they don't have them, there's going to be another point in time at which the lines cross and things break. And so it's a little hard for all of us to know that. And I know for Bitcoin, it's a little frustrating, because you've kind of been trapped in this, downward trending wedge, between kind of 65 and 55. But, gold smells it, which I think is pretty interesting. I mean, as you're aware, and gold is hitting record highs. And what I think that is, and this, by the way, this is what happened in the 2018, 19, 20 period too. Gold broke out from 1365. Bitcoin just sat there. And then ultimately Bitcoin went racing by gold, which is what will happen this time too. Bitcoin will outperform gold massively in this next run, but gold moved first. And the reason is that more people know about gold, it's more broadly held. And I think that people, I think the gold is very good at, quote unquote, smelling future monetary debasement. And if you look at the conditions we're in right now, it's very clear to anyone with a calculator that, we are going to face serious future monetary debasement. Whether it be in a month or in 6 months or a year, it's coming.
Yeah, I think that's a great way to explain it. I think that's true, that it's, we've seen gold move first, but then Bitcoin is the fastest horse, and it sort of moves afterwards, but it pumps even harder than gold does. Yeah. So I think that's what we've historically seen. So it's probably a fair guess to say that could happen again.
There's no doubt in my mind that's what's going to happen. I mean, I think when things break, gold's going to go through 3,000 and Bitcoin's going to go to 150. And easily in my view, because they both represent sound money. I mean, one is old and analog and tired and widely distributed. The other is new and growing and therefore has a lot more upside because of the low level of adoption. I mean, I'm always, Crisis Bitcoin on Twitter always has that. I'm always amazed at the chart where still the entire Bitcoin market is only $1 trillion in the context of $900 trillion of financial assets in the world. I mean, we're talking just a real sliver of the amount of money in the world is invested in the soundest asset in the world. And so, as time goes by, more and more people are going to come to realize that this is the soundest asset, and they're going to adopt it. And it's, that disparity is going to close, right? I mean, Bitcoin's market cap is going to be much higher than it is right now.
So on the government debt, we can get to gold a bit later as well, but on the government debt, there's a lot of different views there, right? Some people are kind of like, oh, this is the debt spiral. It's going to get away from us. It's going to cause this big recession. And then maybe there's kind of the middle view, which is maybe something like a soft landing that, the government is just going to, US government is just going to keep printing. Maybe GDP number will go up, but there'll still be, all these social issues, and it'll be kind of the haves and the have-nots, right? It'll be some people call it the K-shaped, recovery. I guess the question I'm thinking is, how much longer can they just, keep kicking the can? I think one caution I would have is that we want to be cautious not to sort of say, oh, it's all happening now, because they could keep this thing going for a lot longer than any of us really realizes.
I think that's true, but the game is afoot and things are accelerating. The gap between 08 and 2020 or 2019 was smaller than the one before that, and the printing size of each round is larger. And, the issues are getting to be more obvious, and more people are becoming aware of them. And so, but yes, you're right. And we don't know how it plays out. And it's all you can do is say probabilities. I mean, we could have kind of a quasi melt-up boom where the stock market making new highs, unemployment being relatively low, businesses being relatively healthy, the debt level continuing to grow at all levels. Everyone just keeps on leveraging themselves up. And, I think that's a possible outcome. But I think if we do have that outcome, it's going to be inflationary. I mean, I think one thing I think is true is we saw the first, we had peak deflation in March of 2020, right? That was kind of, when the 10-year sold at 60 basis points briefly, that was a really deflationary impulse. And since then, we've gone the other direction. And at various points in time and at various speeds, right? When they printed 40% of the money supply, well, inflation took off, and now they put the brakes on that, and so inflation has calmed down. But I think it's very clear to me that inflation is going to heat up again, and you're already starting to see it when China, as we're doing this right now. China just came out with a big stimulus package in the last 2 weeks, where they decided they're going to support their banks, inject money into the economy. I mean, kind of all the above on the money printing scale. And, the day that happened, I mean, I think, commodities, tin, rubber, various other commodities that are traded in Asia, they were all limit up on the day. And so, yeah, I mean, I don't think there's any doubt that the governments will try to keep the system functioning. And if the release valve is inflation, so be it. The economy's going, ticking along, but it's inflationary. I think there's a possibility though that they lose control of that inflation on the next one, and that's really the issue. The issue is, we're in a period here where we're shifting from everyone believing in the deflationary trend in the stock market, which we had for 40 years, and the correct choice was always to quote unquote buy the dip, because really, if you bought from 2008 onward, if you bought the dip in the S&P, you've been rewarded. I mean, it might have been painful when you did it, but you've been very, very well rewarded. And that's all because the overall deflationary trend was in place and interest rates were lower. So stocks were the best alternative. I think as we've turned the corner here on that issue, and you see it other places too, like you've got this potential dock workers strike, and labor all over the world is realizing that their purchasing power just got destroyed by 40%. And guess what? They want to share. They're like, okay, you want to keep the economy running? That's great. You're going to increase our salaries a lot. And, the dock workers want 60 to 70% over 10 years. Well, even if you take that divide it evenly and say it's 6% a year, that's a lot more than 3%. So we've entered an inflationary world, and in my opinion, and so that's what's going to, ultimately create the problem, because the government has to sell bonds in order to finance these deficits, and they want lower interest rates, and so they will. I think Powell's going to continue to chop rates. I think he's going to take them down 50 at the next meeting and 50 at the meeting after that, because he knows that with federal debt the way it is, that, the $1.2 trillion run rate on the interest cost is just destroying the budget, and they've got to get that down. Now, they're going to get it down in the form of doing more short-term bills, because no one wants to buy the long stuff. And so, where I ultimately can see this going is, as this inflation gets worse, the bond market is going to continue to sell off, and maybe even the stock market starts to have some trouble, because, the margins start to get squeezed, labor's pushing costs up, and the consumer's not exactly thriving, and so they can't, higher prices, they buy less. And so, and when the stock market rolls over, then it's kind of game, set, match on this whole thing, because There's a lot of wealth effect there. That's where a lot of tax income comes from. And, the U.S. government's running fiscal deficits of about 6 or 7% of GDP. And in the 2000 crisis and the 2008 crisis, when those occurred, deficits went up by between 8 and 12%. So let's take the average of 10. Okay, we're running 6 already, and then we have a downturn. And so, tax receipts go down because the markets are down, and, social costs go up because we need more food stamps and, welfare. And so now we're running a 17% deficit. Well, that's real third world banana republic kind of stuff. And you're also starting to see in the dollar, the dollar is just about to break through 100, which is kind of a critical support level for a long number of years here. And so I think the release valve is going to be, lower dollar and higher inflation. The bond market, when they lose the bond market, that will be the big tell, and that will really light the fire underneath the hard money assets, gold and Bitcoin. And the reason that's the case is that if people start not buying the bonds and interest rates start going up, it makes the situation worse. As you know, that's the doom loop. That's the debt doom loop. The deficits get larger, et cetera, et cetera. So eventually they're going to have to do what they did in World War II, and they're going to have to say, hey, you know what? We're going to cap the interest rates at XYZ, or, call it, in World War II, the case was 2.5%, but we're going to have to cap interest rates at 3 or 4%. And to the degree that they go above that, we're going to buy them ourselves. Well, okay, what are you going to buy them with? Well, we're going to buy them with the balance sheet and printed money. And so, so this is back to all roads lead to print or go burr. And when print or go burr, that's what creates the inflation. And so, it's a vicious cycle, that happened once before in the 70s. But, the debt to GDP then was 35%, not 125. And so Paul Volcker was able to shove rates up high enough to get it all under control. But I don't think this time they're going to be able to do that, because if they shoved rates up to 20%, the entire world would go bankrupt. So my view is we now live in an inflationary world, and people really need to think about that in the context of their investments and how they're going to protect themselves, and therefore the need for sound money. And I mean, just as an aside, I'll give a plug. I mean, I'm writing a book on this exact topic, so I'm very kind of current on it and up to speed, and it should be out kind of tail end of this year, early next year.
Oh, great. Yeah, I'd love to take a look at it.
Yeah, when I do it, maybe I can come back on your podcast. But I mean, a long story short is I think the thing that some people are missing, I mean, I know that the consensus on Wall Street is, we're going to get a soft landing, inflation's under control, the 3% is going to become 2%. We're going to go back to that, happy days that we had from 2008 to 2020, 2020 or so. And, market's going to go on to new highs and the economy's going to be fine. I mean, that's the bull case. I don't see it. I just don't think that, I think there are too many, potential problems in that scenario for that to actually occur.
Yeah.
And the biggest one being the deficits,
Yeah. Now, one question I do have on the inflation question as you're discussing it, in your mind, are you distinguishing here with, let's say, CPI inflation and asset inflation, or are you just saying we're going to see both, or maybe one more of asset inflation than the CPI side of it? Where are you at there?
That's a great point. I mean, look, in general, as in the conversation we just had, I was talking more about CPI and living standards and the PCE that goes off of. But there's been a ton of asset inflation too, and assets have been extremely overvalued, but that doesn't mean they can't become even more extremely overvalued. And, the stock market is more expensive than it was in 1929. I mean, John Hussman's done great work on this. I mean, for the stock market to go back to using the historical metrics, and you can say they don't apply this time, but I think they do. For the stock market to go back to kind of a normal level that would represent somewhat fair value, it would need to fall by 65%. So, right now, everybody who's got all their IRAs and their retirement accounts invest in the stock market, and they hear that number, and they ought to be shocked. I mean, I know I would be if I had all my money there, because it's not like bear markets have been outlawed forever. I mean, what's happened here is we've just got a bubble that's really, really big and keeps getting bigger. But having analyzed historically, dozens of bubbles, I can say with a high degree of confidence that all bubbles ultimately burst, and they mean revert. And so, I think that, the other alternative, of course, And what we're talking about here, the enforces. We've got two forces going on, right? We've got an inflationary force and we've got a deflationary force. Debt is inherently deflationary in the longer term because what you're doing is you're bringing consumption in earlier, and then you got to pay it back later. And when you get indebted, it's like drinking or doing drugs. You create a high, but then you got to work it off on the other side. There's a price to pay on the other side of it. Of course, what's happened here is nobody wants to pay that price, and so they just keep getting higher and higher. And there's another alternative, which is rather than pay it off, rather than have the collapse, rather than have the deflationary forces take over, that the inflationary forces just keep getting worse and worse and worse and worse until the underlying currency system involved just disintegrates. And von Mises said this first. I mean, it's either if you have a credit boom, you've either got to stop it at some point and suffer the pain, or you can continue it and then you go into a crack-up boom. And after the crack-up boom, the currency's worthless, because yes, I mean, we're all getting paid millions of dollars a year and stock market's at record highs and so on and so forth, but the currency's got no value. And, it's, gasoline is $20 a gallon and a hamburger costs $200 and so on and so forth. So that's one of the possible outcomes. I mean, I rate the hyperinflation, which I call super high inflation bordering on hyperinflation. I rate that as kind of a 10 or 20% possible outcome. I mean, I would have rated it lower 5 years ago, or 10 years, a lot lower 10 years ago, but it's increasing, because of the way these people are behaving, and it all depends on what the policymakers do. If they behave poorly, they can bring that result about much more quickly. What they're gonna try and do is what they've done historically, which is balance inflation and deflation and kick the can down the road and keep the system functioning. But even in that case, even in a best case scenario where they quote unquote stick the landing, it's, in my opinion, they can't stick the landing on inflation. There will have to be inflation because, the alternative is the debt's not payable. So,
so there's a reckoning to come.
There's a reckoning to come. The question is just, how much, when, how fast, and none of us really know, right? But what I do know is if you look at asset class buckets, I know what side I want to be on in which ones. I mean, I don't want to be anywhere near any bonds, especially long bonds with duration. I mean, and I know people who think there's going to be a huge deflation. They're licking their chops at these long bonds and thinking these are great, but no, I don't think so. Stocks, it's mixed. I mean, some industrial stocks, some commodity-based stocks that aren't so expensive will probably hold value, grow, or do well in an inflationary environment. But I think a lot of the tech stocks, a lot of the things that are not tied to commodities are largely overvalued and therefore are going to decline in value. So, and I think in the next 10 years, the three best performing asset classes are going to be, Bitcoin, gold, silver, and then to a lesser degree, real estate. And of course, the negative on real estate is you can't move it and you got all these, taxes to pay to own it and maintain it. So, so that's how kind of I shake out the investment choices everybody has right now. And what I find amazing to me in the United States is, I have a lot of friends who've done well in the fiat world and have made a lot of money, and they have enormous stock portfolios, and those portfolios have been very good to them. I mean, they've owned Google and they've owned Microsoft, they've owned Apple, and they've got nothing to complain about. And but their view is, why would I ever sell any of that right now? It's worked so great, it's going to keep working, and I think they're missing something. I think that and I would never suggest to any of them that they sell all of it, but some of these people have like zero assets allocated to what you and I see as a pretty obvious and likely very asymmetric bet, which is sound money.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices, such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold Vault. The Bold Vault is a 2 of 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold Vault in just a few minutes, and the Bold Vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. Yeah, so let's get into the gold question.
Yeah, sure.
Obviously, I know you came from the world of gold. I think it'd be interesting to get your thoughts. Here we are, October 2024. What is the perception of Bitcoin amongst gold bugs? And also, if you could just maybe add some commentary on who do you think is buying gold right now? Is it central banks or high net worth, or what kind of demographics are we talking about?
Yeah, let's start with that one. So one of the things I find interesting, and I tweeted this out about a week ago, in the United States, the gold ETFs have been shrinking. They're not, the size of it going. So the US ETF buyer has not been buying gold ETFs until very recently. They started to turn up. That's in contrast to the Bitcoin ETFs, which have been growing. And I think a lot of that's age related. I think older people buy gold, younger people buy Bitcoin. What's, in my opinion, supported the gold price is the sovereigns, who've been very large and record level buyers over the last 5 years. But even more than that, just international businesses that have kind of come to realize that if they store their treasury assets in, T-bonds or dollars, that they've got a melting asset, that it's not going to hold its value. And so, you've seen enormous growth in the volume on, the Dubai Gold Exchange and the Shanghai Gold Exchange. And so I think there are people who may be doing trade in dollars, or they may be doing trade in, rubles or Chinese yuan. But, at the end of the day, if they don't have a cross-border need to go back and spend whatever they receive, like say the Chinese, pay for oil with a yuan. Well, if the oil vendors aren't in need of something out of China, my gut is they're taking that yuan and they're converting it into gold. Whereas historically they would have taken that yuan and converted it into dollars or treasury assets. But I think the world is slowly, there's a lot of evidence, and you got to look kind of between the cracks, and you can't prove it, but you can see volumes and so forth. That I think there's a lot of evidence that would suggest that there's a very big trend among savvy financial people around the world that, the dollar is no longer a good store of value. And that gold is a much better store of value. So I think that's what's generally been driving the gold price. Now, as the U.S. stock market rolls over, and I think it might be in the process of doing that, but I could be wrong, I think we've started to see some upturn, in U.S. ETF gold buying. One small piece of anecdotal evidence, though, that I do find interesting and fun is that Costco, which is a big warehouse, retailer here in the United States, they sell cheap everything. They've been on every quarterly call, they talk about the record volume of gold bars they're selling. And so, there's some segment of the U.S. population that's pretty aware of the fact that the dollar is losing value, and they go to Costco and they pick up a gold bar, and they consider that to be savings, and rightly so and intelligently so. I'd like to orange pill them and have them do the same thing with Bitcoin, and ultimately probably they'll get there, but they're not there right now.
Yeah,
so that's the story there. To your earlier question about gold and Bitcoin and gold people getting Bitcoin, I go to these gold shows and I find it's split about 50-50, Stephan. I mean, I think about half the gold people are like, oh yeah, totally get it. Not necessarily selling my gold, but I've got Bitcoin too. It's digital gold. It's the future. There's an adoption curve. I mean, they get it. And then the other half are the Peter Schiffs of the world who are just, they're deep into their old trade, and they're frustrated that, something's come along to maybe steal some of the thunder, and they're afraid of the technology, and they see the Sam Bankman-Frieds and all the crypto nonsense, and they just kind of make a mentally heuristic decision. Well, oh, that shit's all fraud. I'm not touching it. I get that. When I counter that, what I try and explain to them is that Bitcoin and crypto are two different things. I mean, Bitcoin is a cryptocurrency, but there are no other cryptocurrencies that are Bitcoin, not even close. And the Bitcoin, it represents a technological innovation that is incredibly rare and incredibly important, which is legitimate, provable digital scarcity. And so, and I think that technological innovation is going to change the world of money. And that's what we're in the process of watching right now. It already has, but we're only 15 years in. It's going to take some more time for it to fully penetrate the entire world, but it will, in my opinion. So to me, it's a much more asymmetric bet than gold.
This show brought to you by Mempool.space, the world's leading Bitcoin visualizer, and now they've got an accelerator program. So if you have a transaction that you sent at a fee that was too low to get confirmed, now you can fix this with the Mempool accelerator. The way it works, you can go and search your transaction, scroll down, click accelerator, and you don't need an account. You can pay with Lightning, and then it'll show you it's now in the process of being accelerated, and then after a few minutes, it's confirmed. And so this is a great way to help you out if you are stuck. And this can happen where maybe your wallet doesn't have RBF or CPFP, or it might help you in situations where it's impractical to go and re-sign. So for example, multi-sig with keys in different locations. And thirdly, even in some Lightning scenarios, perhaps a forced close, you might not be able to use RBF. And so in this case, the Mempool Accelerator can help you out. So keep it in mind, and you can find out more over at mempool.space/accelerator. This show also brought to you by Nomad Capitalist. Nomad Capitalist is a leading provider in terms of offshore tax and lifestyle strategy planning and implementation. They can help you go overseas and legally lower your taxes. As many of you know, I grew up in Australia, but I left. I was sick of it in terms of the taxes and the COVID tyranny and all these other things. And so that's why I left, and now I live in Dubai. But that's not necessarily the place for you. You have to think exactly what works for you, for your family, for your business. And Nomad Capitalists have worked across dozens of different countries. They've helped people get passports, residences, bank accounts, and all kinds of other things. And importantly, it's not just about choosing one place. It may be multiple places. And it may be also about making the pieces fit together in terms of how your business fits with your family and you as an individual. Nomad Capitalists have helped many people in terms of going overseas. And if you're interested, go to nomadcapitalist.com/apply. This is applicable for people with a net worth above $1 million US. That's nomadcapitalist.com/apply. So turning to the US election. So it's the 2nd of October. The election is coming, I believe, 5th of November. So it's about a month from now.
Yeah.
There was recently the VP debate, as you mentioned, JD Vance versus Walz, and it looks, from last I checked, it looks like Trump, it's kind of like a coin flip at this point. So I'm curious your views on the election and what that would mean for Bitcoin, let's say, next year.
Yeah, that's a great question, and nobody has the answer. I mean, the problem is I don't think you can trust the polls. I mean, I have to say I thought Walz did incredibly well, Vance did incredibly well last night against Walz. I think Walz looked like a dunce and really fumbled the ball. I think that from what I can see, if this is a fair election, and that's a big if, we'll discuss it in a minute, Trump wins this. I think that, enough of the country is hurting badly enough based on the economy, the inflation, the economic policies of the administration, that they're going to say, get me out of this. I want out. I want to go to the other side. So that's my gut, feeling right now. However, I've read and seen and investigated, all the shenanigans that happened with the last election. And, I recognize that it's probably, 4 or 5 states, and within that, maybe 4 or 5 counties per state. So, I think if you could, jam 20, absentee ballots into 20 counties, you might be able to influence the outcome of the election. So this is what Stalin said: it's not who votes, it's who counts the votes. And yeah, I mean, I hate to be that cynical, but I don't put anything past the other side. I mean, two attempts have been made to murder, Trump, and his being president again is really kind of existential for a lot of people. I think from a crypto point of view, there's no doubt Trump would be more friendly because he's talked about, having a light touch in terms of regulation, or maybe even making it legal tender, et cetera, et cetera. I wasn't thrilled when I saw him announce that he's going to do his own Trump shitcoin, which, some guys, it's just you can't get to certain people, right? I mean, he likes to try and make money, and he likes to promote people, and it's in his nature. So I was disappointed when I saw that, but of course, of the choice between the two, for me it's obvious because one is much more pro business and pro crypto and pro Bitcoin than the other. I mean, I think on the other side, as we were discussing before the show, I mean, they took down Silvergate, Elizabeth Warren's anti-crypto army. They've tried to block a lot of the on-ramps. I'm an investor and custodian. Caitlin's had an enormously difficult time. And I mean, the politics and the bullshit that, the administration has pulled, and the administration and the Federal Reserve have pulled to try and keep, Bitcoin and crypto within their sphere. It's outrageous. And if we had fair courts, we'd be winning enormous damages, but my sense is we don't have fair courts either. So, but honestly, I can't tell how it's all going to shake out. I mean, the bull case for Kamala is and I know some of these people, there is I think the abortion issue, is a hot button for a certain portion of, on both sides, and the fact, there are women who are, irrespective of where they are on the economy, they're going to vote that single issue, and they feel like there's a lot more women's choice and freedom and reproductive rights and so on and so forth. And you can call it whatever you want, but they feel much more comfortable in the Democratic Party. So I think if the Republican Party kind of got their act together on that particular issue and arrived at some decent compromise, the Democrats would be just completely dead. But that's the one issue that I think gives Kamala a little bit of strength. So we'll just have to wait and see. I mean, we're going to know very, very soon. No matter what happens, the other side's going to be very upset and probably claim fraud, and we'll have to see. I certainly hope that Trump wins. I intend to vote for him. I vote in Florida, and I intend to vote for him. So. But we'll see. It's a tough call. I mean, one thing I will say on both of them, though, I don't think, I think Kamala spends more faster. Okay, I think there's more UBI, there's more debt forgiveness. There's just, she thinks she's got an unlimited checkbook, and they're gonna, in my view, they're gonna go full modern monetary theory view of deficits. What deficits? We can just print to handle it. That's. That side, I think there will probably be a little bit more restraint on the Trump side. I mean, I caution that he says he's going to balance the budget. He says he's going to, cut all these costs. I mean, my sense, but he also wants to cut taxes. My sense is it's going to be pretty hard for him to really make a big dent. I mean, Luke Roman's done some good work on this. I mean, to get the budget close to being balanced, they would need to kind of take 30 to 40% out of the defense budget and Social Security and Medicare. So, think about that forever. So what are the odds that, the retiree population in America is going to live with a 30 to 40% benefit cut, and that the defense, establishment is going to live with a 30 to 40%, expenditure cut? I mean, it's, I think the odds of that happening or going through Congress are just extremely slim. Absent some total crisis, and the total crisis is the dollar is plunging, gold is going to 5,000, Bitcoin is going to 250,000, the bond market's in disarray, interest rates are going up, and the Fed is being forced to monetize all the debt. I mean, that's a crisis, and if that happened, then maybe the people in Washington would face the music and say, you know what, we got to balance this shit, or else the currency is going to zero. I mean, that's kind of the extreme case, right? I mean, when Gresham's law really gets going. But I don't think that, we're not there yet. We're not even close to there yet. We're still in the, hey, this is no problem, we can spend whatever we want stage of things.
Yeah. It does. I mean, maybe it's an academic exercise, but if we were to look at kind of an honest pathway of trying to, let's say, cut the size of the state and cut the entitlements, I mean, what would that look like? Would it be like, okay, all these millennials and Gen Z have to kind of agree to pay into the system but not get anything out of it when they're old? And, the retirees on their side the pensioners would have to kind of take less, the military would have to take less. I mean, maybe it's just completely, just not even happening. I'm curious what it would look like.
I feel like it's so far gone, Stephan, that it's unlikely to ever, to get to full balance. But around the edges, I mean, look, there's some relatively simple things or simpler things you could do. You could cut back on all the foreign aid, right? So you're not going to send money to Ukraine. You could, take down the footprint of the U.S. military. We've got bases all over the world. You could take down, the costs on some of these defense systems, and we're building all these weapons that really are actually kind of dinosaurs, because a Stinger missile can wipe out a, multi-billion-dollar battleship or a multi-hundred-million-dollar airplane. Do you know what I mean? I mean, it's so you'd have to cut back a lot there. I think on the other side, it wouldn't strike me as unusual or maybe harsh in terms of, if you're kind of trying to save the country and pull everything together, to means test Social Security and Medicare. I mean, if people have a certain level of assets, I mean, I've actually started to collect my Social Security. I'm old enough to do it. It's a small number, but great. I mean, I paid into the system. I'm not getting even a fraction of what I paid in back on real terms, but all the same, I've got the means that if the government came to me and said, you know what, you really, you're too rich, you really don't need this. We're gonna, even though you paid in, we're gonna cut you off. I'd accept that. I mean, for the good of the country, I'd accept that. And I suspect other wealthy, retirees would. But again, that doesn't really get you there. You can increase taxes on billionaires, and you could do some minimum corporate taxation stuff. I mean, I'm opposed to all taxes. However, you've in the U.S. you've got companies that are just extraordinarily talented at paying zero tax, and they live within this system, and yet they pay zero into the system. And particularly at the tech level, you've got some companies that really are effectively monopolies because of the way the network system has evolved, such that like a Google, a Microsoft, a Facebook. I mean, these are monopoly businesses, and if you were to put some kind of a royalty on all of their sales, I'm saying, look, we can't break you up because we can't make 3 Googles, but since you are Google and since you're earning these outrageous profits as a result of your position, we're going to subject you to a minimum tax of 5%. For the good of the society, you got to pay in. And, I mean, some people I know will scream at that, but, there's a social argument for doing it, right? I mean, but the answer to your question is sadly, I think it's really, really, really too far gone. And there's going to have to be a very meaningful monetary and system reset. I mean, I think you and I have discussed this before. We're in a fourth turning, right? and everything's broken. And, you can't really fix badly broken things with little Band-Aids, just means testing. So you're not going to get there. Sadly, we're going to run into a wall. There's going to be a fairly substantial crisis. And then everybody's going to have to sit down with a piece of paper and go, okay, we really blew this. The Keynesians were wrong. The sound money was the problem. Hyperinflation has wiped out everyone's wealth. Let's reboot and let's start with a new system. The money is going to be X, and people will trust it because it's, defined by code and limited in supply. And slowly but surely the economy will rebuild. And that's the thing. It's, that process that I'm describing would be enormously painful. But the other side of that process, I mean, I've studied hyperinflation throughout the world for the last couple hundred years. If you don't kill people, and you don't destroy the technology, and you don't, if we don't go radioactive, all we're really talking about here is the money is broken and the money fails. And so if you reset with a new form of sound money, and everybody says, oh, these are the rules, I get it, I'm going to play inside those rules, and guess what? The economy will regenerate itself. I mean, it might take a few years. It might be kind of ugly. There'll be winners and losers, for sure. People who have bonds will be, crushed. But, we'll come out the other side, and I think in a way that, in my view, is the system will look much, much better and be much fairer. And there's something, as bad as the transition might be, what I guess I'm trying to say, I want to be an optimist because I know a lot of people in the Bitcoin space are optimists, and I am too. And that is that, Bitcoin will fix it, and we will get to the other side, and things will be better. The one thing I have a little trouble with, I know some Bitcoiners are just like, well, we can slowly creep over to there, and it's all going to be good without a day of reckoning on this other stuff. I'm not sure how that happens. I'd like to hope that can happen, but I mean, there's if Bitcoin wins, there are going to be losers, and that's going to create some serious pain in a lot of areas. So, but I think if people who embrace Bitcoin and save in Bitcoin terms, your kids, grandkids, and great-grandkids are going to notice the difference in a very meaningful way, in a very, very meaningful way. And so that's why I do what I do in terms of advocating for this kind of quote-unquote perfect form of money. I think that's why Saylor does what he does. I think it's why we're all doing it, right, Stephan? I mean, if you've got a libertarian bent, you realize that the problem is that the state controls the money, and they use it as an instrument of power to control all of us and to create wars and to kill people. And that's all evil stuff. And since we're not in a position to rein the state in on killing people, we are in a position to rein them in on money, because we don't have to use their money. We can use our own money. And we've now got a form of money that's totally fair, widely distributed. Everyone plays by the same rules, can't be messed with. That's a very, very powerful thing, very powerful. And so, give it time. Another 10 years, another 20 years at the most. It's gonna solve the problem, in my opinion. So we're going in the right direction, but I know it's frustrating. I mean, a lot of people would say, hey, we're stuck at 58,000. Well, yeah, we are. It's annoying. But I said, I was with Natalie and James yesterday, and I said, here's my prediction. I think by the end of this calendar year, we'll be over 100,000. Bitcoin's forming this nice declining flag. Top of the flag, it looks like you kind of break out at 66 from the flag. You break out from the all-time high at 72 or 3. I think when we go through those, we're going to squirt up to 100, very quickly. So, and I think the gold is a tell. The gold hitting records, and the awareness on the part of a larger and larger part of the world that something's wrong. I mean, the disconnect is, you've got guys like Krugman tweeting, "Hey, we've done it. We've landed the plane. 2% inflation, 3% inflation. It's all good. Everything's great." And I tweeted back to him. I said, "Yeah, okay. If that's the case, then why is gold at a record high? If you successfully landed the plane and inflation's under control, then the price of gold should be going down, not hitting new all-time records, right? It's hitting new all-time records because it says you guys are debasing the currency, and you're going to have to debase it more in the future. That's what gold is telling us right now. And so, it is what it is. I don't know. That was a long-winded answer.
Okay.
I should let you ask questions.
Let's talk a bit about the whole suppression narrative, right? I think that's something that people have spoken about for years in the world of gold, and some people are starting to say this in Bitcoin also. I'm personally not as convinced about it, but I know, for example, someone like Caitlin Long has spoken about this in the equity world, where people were, let's say, pledging the same equity to multiple people, and so there was this kind of over pledging of the same asset. So, and I guess the other thing would be, look, gold is at all-time highs, so it's difficult to argue that it's being suppressed if it's just now hit all-time highs, right?
Yeah, suppression is a relative term. You're right, it is at all-time highs, and it has been suppressed over the years. Let's frame it, okay? If we went back, we were on a gold standard in 71. It was loose, but, it was international exchange. But we were on a gold. And one could take the monetary aggregates and divide it by the gold that the United States held and come up with a $35 reference price at the time, roughly. Okay. Did the same math today, Stephan. The gold price would have to be $80,000 an ounce. So, okay, all the money that's been created. So the point is, yeah, we're hitting record highs, but we're still a beach ball that's been held way underwater. Do you know what I mean? In other words, if you wanted to have the currency backed by gold today at 100% level, you'd have to go to 80 grand. Now, everyone who's done currency analysis knows you don't have to have 100% backing to have a gold-backed currency. You can have 20% backing. So maybe gold has to go to 20,000, but even 20,000 is a lot less than, the 2,600 that we're at today. So yeah, but it has been suppressed. We know that there's a lot of paper gold, and Caitlin's right. I mean, there is the risk of paper Bitcoin. Sam Bankman-Fried had paper Bitcoin. He had Bitcoin on his balance sheet, or he sold Bitcoin to customers. He didn't have the underlying. And there will always be that risk. I think that a couple things mitigate that to a degree. One, Bitcoin is more transparent than gold. You can see the ledger, you can see what's where. Two, and by the way, some of these guys, I was very impressed to see BlackRock actually talking about being willing to share the Coinbase addresses they have where their coins are. It's like, oh, this is good, So the other thing is that if you look at the gold market, the size of the gold market, the futures of the gold market, and the daily trading, it's multiples of the size of the underlying. And in the case of Bitcoin, that's not true. There are derivatives, there are futures, there are options. But the size of those are small relatively to the underlying. So I don't think they've had the time to develop the Bitcoin suppression schemes the way they, the gold suppression. I mean, they started suppressing the price of gold in the 60s. And so they've had a long time to perfect this. Bitcoin, the other thing is, I would say is, they've suppressed gold in a way. One of the ways they did it with the BIS, but they also did it out of the Cayman Islands and these third-party anonymous accounts that I saw in 2013 that were trading enormous volumes of gold that only could have come from a sovereign, is that, the sovereigns, recognizing that this is a matter of national security, would say to, they would take on a short position knowing that if they got run over, they could just print the money to fill the hole. But in gold, if they were going to get run over, they weren't likely to get run over with a 5x. In other words, gold, a big up year for gold would be 20 or 30%, right? Well, Bitcoin's a different animal. It's a different thing when, in 2020, 2019, 2020, it went from 10,000 to 50,000. That's 5x, very quickly. That's a bigger, if you're short it and you're trying to manipulate it, that's a really big hole to fill. So, I kind of tend to lean toward Bitcoin is not manipulated, but, in any big financial market where there are a lot of players, there will be those who will try, and there will be, I'm sure there is paper Bitcoin out there. There are futures contracts on Bitcoin. They don't have the underlying. So that's paper. And if that market were to grow, rapidly and aggressively, I would become more concerned that, that there is a Bitcoin suppression scheme taking place. But I haven't seen enough to get me convinced that's the case. And yet I've studied the gold market enough to know with absolute certainty that there are, probably 100 claims for every ounce of hard gold in the world. There's so much paper gold out there.
Yeah. But it's just that difficult to take in specie redemption of gold compared to Bitcoin.
Right? That's the problem. It's how do you ship $1 billion worth of gold? It costs a ton of money, and so the central banks and the bankers and the depositors, they all just say, trust me, bro, and history shows that that's not necessarily a good thing to do. We have the U.S. has 261 million ounces theoretically. I don't really think we do. I think the temptation to raid those ounces over the last 50 years has probably been pretty substantial. I'm sure we have some of it, but I'll bet some of that's been sold or used. I was actually speaking to a very sophisticated gold guy the other day, and he said, "Well, look, it's not." And he was involved with the GLD at one point. And he said, "It's not really a matter of paper gold all the time." He said, "It's more a matter it is paper gold." But he said, the gold ounces are there. The problem is two people might have the same claim to this, claim to the same ounce. That it's fractional reserve, right? That's what
right.
Fractional reserve is. Yeah.
Yeah. And so, we might see maybe more of a push for proof of reserves in Bitcoin land.
Absolutely.
And, that might help, but of course, not your keys, not your coins is, if you can, not your keys, not your coins, withdraw to your self-custody. But, I think we will see more people interested in doing that. And that in turn, like in a way, we all have an incentive to encourage that because that's going to help pump the price even harder.
Absolutely. And let me just add one other thing that I think is important, because somebody asked me this the other day, and I think it's worth mentioning. And and I'm not out on the limb in terms of conspiracy stuff. And of course, a lot of conspiracy stuff is proven to be true. I mean, the Kennedy assassination, et cetera. But let me say this: the U.S. government approved the ETFs, right? It's convenient for the U.S. government that a lot of Bitcoin sits in ETFs in big, well-known financial institutions, right? Because if a president were to say, you know what, the American dollar is falling and gold and Bitcoin are the reason that's falling, and the measures, and it's very obvious that it's falling, we're going to do a 6102. And guess what? We're going to call up every big ETF and say, you need to send that Bitcoin to us because it's going to be part of our strategic reserve. We'll pay you cash, whatever the dollar value is right today. And you send that cash out to all of your holders. And, we now own that Bitcoin. They do not. And of course, the next day, Bitcoin would go up 10x. But, the point is that's a 6102 in the Bitcoin world. And that's, I've got some of those ETFs, my IRA accounts, at brokerage firms. I can't go buy native Bitcoin and get the coins with those accounts. But other Bitcoin that I have, under my own control or control of other parties, because I have multi-sig and all kinds of security stuff. But the point is, there's having Bitcoin outside of the ETF world, I think, is an important part of the risk mitigation strategy, because, if and when the dollar gets in a lot of trouble and these fiat currencies really are failing, and I'm thinking 3 or 4 moves out, I don't think that what I described about the government saying, hey, we got to have this Bitcoin and we need it as a strategic reserve, I don't think that's an impossible thing. I think it's actually possible. So,
So if you had to guess, let's say next year, where do you kind of see gold and Bitcoin getting up to? Where could you see it going to? And are you kind of expecting like a big drawdown like we've seen historically?
Yeah, I mean, I kind of have looked at the cycles and I've looked at the power law, and I think on the next ramp, I think we're somewhere short of what I call the next thing I call the big print. Okay, so the next big print is going to come when something breaks, maybe the bond market, maybe the stock market, whatever it is, and the government realizes that they've got to, or else everything's going to collapse. That's coming. Outside date on that is 18 months. Inside date on that's tomorrow. Medium date on that, 6 months maybe, 6 to 9 months. I think when that occurs, Bitcoin will go and exceed the power law. We'll get a 2 standard deviation move above, and we'll pump to 300, 350. I think gold will probably run to, now I'm beginning to think 4,000 or 5,000. I mean, it's getting closer to 3, right? I used to say I'd run to 3. Now 3 is too low. I think silver will probably run to, 75 to 100. Okay. Following that, my suspicion is there's a possibility that we get such severe deflation that even in light of the big print, everything still kind of quote unquote collapses a la 29, and there'll be an enormous scramble for liquidity. And the Fed will do everything it can to provide liquidity, but absent literally sending out checks in the form of UBI to everybody, the economy will be collapsing. And this is kind of David Hunter's scenario too. And in that case, the Bitcoin will probably correct from that 200 or 300 peak back down to 85 or 100, and gold will correct. Gold will have a serious correction too, because we'll have a really deflationary impulse. I think then the next move is you'll get quote unquote the bigger print, right? Okay, the economy is totally collapsing. Nobody has any money. The prices of everything are falling. We're literally going to do UBI, where we're going to send every family a check for $50,000 to kind of keep things going. And to me, that one will be the last one. And at that point in time, Bitcoin will go to 1 million, gold will go to, 20, 30, 40,000, and effectively the currency will fail. And there'll have to be some kind of political meeting of the minds to solve the problem. And I kind of see the time frame on that as probably 2027, maybe as late as 2030, 2031. I mean, if you look at this as the fourth turning and you look at the average length of fourth turnings, you start at 2008, which is what I do, and you add the average length, you kind of get into the late 2020 period, like 27, 8, 9 kind of period, 2028.
I see, yeah. So in a sense, you're seeing kind of...
You know what I mean?
Yeah, so in a sense, you're seeing kind of 2 more cycles to come, basically.
Yeah. I mean, at some point, I think, if absent, intelligent and, I mean, by the way, at any point in time, all of this could be stopped by a monetary reset and responsible behavior out of Washington, D.C. But I think absent a crisis, I just don't see how that gets done. I don't think that happens. So I think, sadly, we're going to have to drive toward a crisis. And I think the crisis will be, as I've described, a few years out. And then at that point in time, people will be so frustrated, so angry, so hurt, so broke that a politician who stands up and says, hey, you know what? The problem really here is we don't have sound money, and we've got to go to a sound money standard. Here's what it's going to look like. Here's how it's going to be, and we're going to reset and start over. That person will win overwhelmingly. I mean, I know some think the U.S. will break up and this, that, and the other. I think no, there's much more likely to be just kind of a constitutional convention that kind of tries to reset the rules, and hopefully the people involved in that will do a good job, so that we can put the world back on a sound money footing. And I mean, once that happens, boy, things are going to get great. I mean, it's all the technology we've got, all the developments and there are a lot of, I mean, apart from all this money system being broken, there are a lot of great things happening in the world. I mean, it's, the efficiencies, the electric cars, all of it. I mean, I've become a heavy user of ChatGPT as an example. I'm blown away with how much information I can gather and how quickly I can gather it by asking a question to my cell phone, and I, you see these robots that are coming along. I mean, these longshore guys, well, they better get a good deal this time because 10 or 15 years they're not going to have jobs. There's a lot of there are a lot of good deflationary forces that are going to raise living standards for all of us. I mean, if we get nuclear power going, which we really need to do, I mean, it's but as Saylor says, and rightly so. I mean, AI is going to drive the demand for nuclear power because AI requires enormous amounts of electricity. So I mean. They're contrasting things going on in the world. There are a lot of good things and there's some very bad things. But government not having the printing press, I think, will lead to a much lower strife world. As we talk here, we're talking at a period of time where we've got a couple of wars going on and they're very ugly and a lot of people are suffering and that's just all. It's all tragic and to me that's all occurred because these centralized governments can pay for these things. And if we had a more decentralized system, nobody would vote to go kill other people. So, it's so a better world is coming, but the getting through this particular storm, I don't want to. I can't blow sunshine up people's skirts, as they say. I mean, that we are in a storm, and I think to deny that or to try and be positive and optimistic and sunny in light of that, I think you're doing yourself a disservice. I think we've got to recognize that we are in a storm, but there's a much better day after the storm, but we're in one.
Yeah, so look, I think that's a great spot to finish up here. So listeners, you can find Lawrence online. I'll put the links in the show notes. Okay. Lawrence is managing partner at Equity Management Associates, also advisor to the Bitcoin Opportunity Fund. Lawrence, look forward to catching up with you sometime soon. And of course, I'll check out your book when it's out. So look forward to chatting soon.
Yeah, we'll chat soon. Thanks, Stephan. Nice to be with you.